Morning, everyone. So my name's John McConnell. I'm the president and CEO of Victoria Gold. And as Gilbert said, we're going to talk about Canada's newest gold mine, the Eagle Gold Mine in Canada's Yukon Territory. Usual forward-looking statement. Now on to Victoria. There's a sentence at the top of the slide here that I stole from a BMO research report, and I think it perfectly describes Victoria. A large open pit mine with a long reserve life in Canada is just about the best asset to own in this current high gold price, low oil price, low exchange environment. In terms of our strengths, we achieved commercial production in July. Commercial production is generally 80% of capacity, and now we're ramping up to full production and should achieve that by the end of the year. We've provided guidance that will produce between 85 and 100,000 ounces of gold this half. And in full production, which next year will be our first full year of production, we'll produce over 210,000 ounces of gold at an all-in sustaining cost of less than $800 per ounce. Now, let's just talk about those numbers for a minute. So $800 per ounce, gold is currently trading at over $1,800 per ounce. So that's $1,000 per ounce margin for every ounce we produce times 200,000. This little company will be cash flowing over $200 million per year. Now I'm just going to show a video that talks about the operation, an example of a leach mining.
Victoria Gold's Eagle Gold Mine produces gold doré bars from a conventional open pit mine. The process includes blasting, loading and hauling from the pit, three-stage crushing, conveying to the in-valley heap leaching facility, heap leaching, and gold recovery in the process plant, then heated and poured into doré bars, which are sold to a refinery and shipped off-site. 2 gold deposits called reserves will be mined, named Eagle and Olive. The combined reserve contains 3.3 million ounces of gold and will take 11 years to mine. The Eagle open pit is situated on a hillside and, when completed, will measure 1,400 meters long, 700 meters wide, and 500 meters deep. The Olive open pit will come into operation in year 9. Rock in the open pit is blasted and then loaded into haul trucks. Gold-bearing ore is hauled to the primary crusher. Non-gold-bearing material is hauled to a waste rock storage area. The Eagle Gold Mine fleet includes 2 Cat 6040 shovels and 11 Cat 785D haul trucks. Each shovel bucket can hold 40 tons of material, and each haul truck can hold over 3 scoops, or 150 tons. The haul trucks travel at approximately 20 kilometers per hour from the pit to the primary crusher and unload the gold-bearing ore into the dump pocket of the crusher. The primary crusher is a gyratory crusher that crushes the ore boulders to approximately 12 centimeters in size, about the size of a grapefruit. 29,500 tons of ore can be processed by the primary crusher each day. Once crushed, the ore is conveyed via the coarse ore conveyor circuit to the secondary and tertiary crushers. During the coldest months of the year, January to March, crushed ore can be temporarily stored in a stockpile to be processed later. The secondary and tertiary crushers further crush the ore to a target size of 6.5 millimeters, about the size of a grapefruit seed. The crushed ore travels on a covered overland conveyor approximately 1.5 kilometers to the heap leach facility. The heap leach facility is located in a valley that has a protective double or triple liner installed. crushed gold-bearing ore is stacked onto the lined heap leach facility via a series of mobile conveyors that stack the ore in 10-meter lift or layers. A network of drip emitter tubing is installed in each layer, about 1 meter below the surface. The tubing emits a weak cyanide solution, which percolates down through the ore, dissolving the gold. The gold-laden or pregnant solution is then pumped from the heap facility to the gold recovery plant. In the gold recovery plant, the gold is extracted from the solution, and the resulting barren solution is recycled and used on the heap leach. The gold is heated to over 1,000 degrees Celsius in the smelter and poured into gold doré bars, weighing approximately 1,000 ounces. The doré bars produced at the Eagle Gold Mine contain gold and some silver. The doré bars are sold to a refinery and shipped off-site.
I hope that gave you some sense of what a heap leach mine is, in particular in Canada's north. So just to remind you of our location, we're in the Yukon Territory, geographically roughly the center of the Yukon. We have excellent infrastructure in place, year-round road access to the mine. We've tied into Yukon Energy's power grid, so we have access to low-cost hydroelectric power. Nearest community is the community of Mayo. It's a small community. We have about 25 employees that live there, but more importantly, it has a full-service airport. Pre-COVID, there were 5 sched flights a week, so I could leave Vancouver at 8 in the morning, connect through Whitehorse to Mayo, drive to site and be there in plenty of time for lunch. So excellent access. Environmental, social, and governance is very important to us. In terms of health and safety, we have a record that is the envy of the mining industry. We had 1 lost time accident very early in the construction phase, and since then we've not had a second lost time accident and have worked more than 2.4 million work hours. Community investment, we work very closely with the local First Nation, Nanisivik Zinc, and we've made sure they've benefited from both construction opportunities and now operations opportunities on the business side. We also support a charity called Every Student Every Day, and its role is to provide money for funding of projects that encourage children to stay in school. We just had our annual fundraiser this past weekend, and I'm pleased to report that we raised over $250,000 for future projects. In terms of environmental stewardship, we have a home in Whitehorse and a home in Mayo, so I certainly want to make sure my backyard is protected. And I'm also pleased to report that we've had 0 environmental incidences through construction and now after more than a year of operations. One of the things I'm most proud of is our employment. We have more than 350 employees working a 4-week in, 4-week out rotation, and more than 50% of those are people that live in the Yukon. The other 2 areas statistics that I'm proud of are 25% of our employees are women and 25% are First Nations. Updated technical report. We issued this report last December, so the numbers are still very relevant. Total resource is 4.4 million ounces, reserve 3.3 million ounces at a grade of 0.65 grams per ton. Annual production over 210,000 ounces per year. Cash cost less than $600. All-in sustaining cost less than $800. Now, when we calculated the NPV, we used a gold price of $1,300. And at $1,300, the NPV is $1 billion. And I can tell you that at current gold price of $1,900, the NPV is now over $2 billion. So very affected by the price of gold. In terms of ramp up to full production, I've broken it into categories you see here. Mining is 100%, primary crushing 100%, secondary and tertiary crushing. All of the crushers are working fine, but we are experiencing higher wear in chutes and on liners. So we're retrofitting those right now, and that work will be complete by the end of the year. Similar, the overland conveyors 100%. Stacking conveyors, we're experiencing the same thing, higher wear than anticipated, and we're making those changes now. And again, that'll be 100% by the end of the year. The ADR, or gold recovery plant, it's a beautiful plant, well designed, lots of capacity. It's running at over 100%. And in terms of people, we're fully staffed now, and we have one of the best groups of people working at the mine that I've seen. 2 questions any investor should ask a new mining operation. Number 1 is, how is the grade reconciling? And number 2, how is the recovery reconciling? In terms of grade, we sample all of the production blast holes. We also have a belt sampler that takes a sample of the material going out to the leach pad. We assay those samples, and then we reconcile them right back to the original reserve block model. We're seeing excellent agreement. So tick the box on grade. Recovery, we're also seeing good correlation, but because this is a heap leach operation with a more than 150-day full cycle, it's too early for me to definitively say that we're seeing the recoveries that we expected. It'll be at least another 6 to 9 months, but again, I can tell you everything is correlating well. Exploration, we have a very large land package in the Yukon, more than 550 square kilometers. It's only the last 3 years we started to step out from Eagle, that little star in the center, and look at the regional potential. We've now established some 13 high priority targets that we'll explore over the coming years. Our focus right now is Nugget out to the east. It's another large granodiorite intrusive with very similar characteristics to the intrusive that hosts Eagle. We built a road out there last summer, and we're able to put in a few drill holes on an area called Raven. Very exciting because we're seeing multi-gram intercepts, particularly when you consider that Eagle is sub a gram. When you see assays like 7 grams, 5 grams, it gets us pretty excited. Our exploration program this year was delayed because of COVID. Normally we would be in the field in April. This year we didn't get into the field until July, so our program was limited. We drilled about 10,000 meters in 45 holes, and you can see the first 12 holes there to the left. Again, lots of multi-gram intercepts, so we continue to be excited and think we have a tiger by the tail out there. Another interesting target in the same area is Lynx. This target was explored by a previous operator, and we have all the data. So last winter, we essentially mined the data, and we think in many cases they were exploring it the wrong way. We've now applied our learnings from Eagle and the other exploration targets on the property, and we think there's potential for another new discovery here. Shareholders, I would describe our registry as chunky, with Orion Mine Finance owning 36%. But after that, you can see a very blue chip group of institutions hold Victoria, including Fidelity, Bank of Luxembourg, Sprott, Sun Valley, Century, BlackRock, CI. Personally, I own 1%, and our chairman, Sean Harvey, owns 0.5%. And I should point out that we purchased those shares in the market. We did not IPO this company and give ourselves a bunch of founder penny stock. So we certainly have skin in the game, and our interests are aligned with that of our shareholders. Analyst coverage, 5 analysts cover Victoria. The 3 most active are Cormark, PI, and BMO. And you can see their target prices there above $20. We're currently trading at about $15. So room for maybe not a 10-bagger, but certainly a double going forward. So is Victoria an attractive takeover target? I think so. And we put out some criteria. We looked at, if we were acquiring something, what would we look for? We came up with low cost, long life in the Americas, in particular Canada, and greater than 200,000 ounces per year. And you can see a list of companies there and assets, and only Victoria and Pretium meet those full criteria. So I would say conclude that both companies are very attractive targets. Will the share price continue to re-rate? You saw the analyst target prices. Another way to look at it is P to NAV, or EV to EBITDA, or P to cash flow. And I think there's certainly, as we move to full production over the next 3 to 6 months, you'll see us re-rate further and achieve those targets that the analysts have out there. So just to conclude, why invest in Victoria? We've perfectly timed being in production. We'll produce 85,000 to 100,000 ounces this half. We're focused on debt repayment. As a matter of fact, we had so much cash flow that in July we made a $10 million early payment on the debt. We'll see the share price re-rate further. 200,000 ounces per year is meaningful in Canada. To give you an example, if an Agnico Eagle were to acquire Victoria, would increase their annual production by more than 14%. Great exploration opportunity. We think there's potential to increase the production to 250,000 ounces per year by going to year-round stacking. And certainly the mine is significantly extended at the current gold price. Thank you very much. I think maybe we've got a couple minutes for questions, Gilbert.
A bit got overtime. Maybe I squeeze in one from the Chinese side here. We went a bit over time here. Just one question. You recently done, I think, from a financing recently. Is there a reason why you still need to do financing even though you're producing gold right now? Maybe you can explain a bit. Yeah,
we did not do a financing. That was Orion did a secondary financing. So Orion sold 5% of Victoria to go from 42% shareholder down to a 36.5% shareholder. We did a lot of work on the financing, but we get no benefit other than we think we now qualify for some of the index funds. They don't really like companies that have a single large shareholder over 40%. So I think you'll see us included in many of the index funds when they rebalance their portfolios in January.
Great, great answer for that. So we'll direct the rest of the questions to you because we're running a bit out of time now. So thank you, John, for your presentation and update to our audience here today.
Great. Thanks, everyone. Have a great day.
Yes, you too.